Today I'm going to teach you about loan to value and how to calculate it. A loan to value ratio, abbreviated LTV, is the relationship between how much you're borrowing and how much a property is worth. For example, if you buy a $400,000 home and you put down 20% or $80,000, your loan amount would be $320,000. This brings your loan to value ratio to 80%. When you're applying for a mortgage, you're able to borrow up to the loan to value number. The more money you're able to put down, the less money you'll have to borrow, which in turn lessens your loan to value. Now remember, your loan to value does affect your interest rate. For example, if you have a high loan to value, say 95%, and a lower credit score, your interest rate could increase by a small percentage. But the lower the loan to value, the better interest rate you may be able to get. If you have questions about your loan to value and how to calculate it, give me or my team a call and we'll walk you through these steps. Thanks for watching today's video. Be sure to hit that like button and subscribe to our mortgage channel for more mortgage content. We're the Mortgage Firm Tampa, a local lender serving clients like you.